Welcome back. This is going to be video number 2 in the Key Concepts series, as I'm going to call it. If you didn't see the first video, I'm not going to make this tangent as long, but basically what I've decided to do before I go back and study all of the health information, all like the accident health information that I don't know because I didn't test on it because I only have a life-only license, I'm going to make a series of videos that are shorter form than my current videos called the Key Concept series, which is basically just going to be, I'm going to go through each one of the chapters on Excel and pick out some key concepts, make videos about them, because I know it's a little bit difficult if there are certain concepts that you guys are struggling with, to go to my old videos that are question formats and vocab formats and be able to like search or pick out exactly where the concepts that you're struggling with will land. So I wanted to do this that way they would be shorter form, easier to grasp, and I hope chewable, So video number 1 was insurance and indemnification, very, very basic. This one's going to be the concept of reinsurance for anyone that's having trouble grasping that. This video is going to be extremely short. Reminder, you guys can book with me one-on-one if you're having trouble on any key concepts and you want some kind of one-on-one coaching before you go to take your test. The link will be below. You can book me through Calendly. All right, so I made these, I think they're cute, little presentations. So I'm going to share my screen and I'll get into it. Let me make it bigger real fast. How did I do this last time? Okay, I figured it out. Okay, so like I said, this video is on the key concept regarding reinsurance. So reinsurance is an arrangement by which an insurance company transfers a portion of an assumed risk to another insurer. This limits the loss any one insurer would face if a very large claim would become payable. So let's dive into that a little bit, shall we? So essentially, think about it. These companies have to have a certain amount of money, right? You are paying, let's say, $35 a month for $250,000 of coverage for the next 20 years. Even if we sit here and do the math on $35 times 12 months in a year, that's $420 a year times the next 20 years, you're only ever investing $8,400 into that policy. But if you pass away, a $250,000 check is going to be written to your family. So think about that. It's not even, right? It's crazy that this is even something that we're capable of doing. So these companies are out writing these policies day in and day out, right? Literally, we're sitting here writing these hundreds of thousands of dollars worth of insurance policies for our clients. So, okay, let's take COVID as an example. A bunch of people passed away all at once. And of course, some of them had life insurance. So these companies were being forced to pay out all these claims, right? So that tends to drain the bank account when somebody is investing, 8,000 but getting 250. So what they do is they say, we're going to essentially reinsure. So I'm going to sell this risk that I've just taken on by writing this $500,000, $250,000, $1 million policy for this client. I'm going to sell it to this company over here, right? We're reinsuring. So they take that risk on. And then what that does, that frees up even more capital for the insurance company to be able to say, now we can go out and write more policies. Who wants to buy the next one? So it's essentially these companies like sharing and spreading the risk out so that they're not becoming insolvent or going out of business because all of a sudden a very large claim or many very large claims become payable and they just don't have the funds to do it. So the seeding company is the company that's transferring the risk. This is also called the primary insurer. The accepting company is the company that is assuming the risk, right? This is the reinsurer. Captive insurer. Okay, so this is an insurer that's established and owned by a parent firm solely for the purpose of ensuring the parent firm's loss. So that's why this little umbrella has the baby umbrella underneath, because that parent company formed that tiny umbrella only for the purpose of them being the reinsurer. So this company, this reinsurer, was formed by this company, this insurance company, just to take their risk on. This company is captive. They're not out writing their own policies. They don't have their own clients, their own insureds. They're captive. They're just existing to take on the risk from the parent company. All right, and like I said in my first video, these concept videos, I will include sample questions of what questions might look like that will pop up on your exam having to do with this concept. So I have two for you guys for reinsurance. So the first one is, which of the following is a type of insurance where an insurer transfers loss exposures from policies written for its insureds? Obviously, that's reinsurance. And number two, which of the following is an insurer established by a parent company for the purpose of ensuring the parent company's loss exposure? And we know that to be the captive insurer. So those are two examples of what questions regarding reinsurance might look like on your exam. I hope that was helpful. Like I said, these are going to be much shorter videos. That way, if you're having trouble with concepts, you can just boom, click on them and get your answers right away. That is all I have for you for this video. If you have any other questions regarding reinsurance, please put them in the comment section below. That way I can reply to you, you can get your answer, and then anyone else that might have the same question can get their answer too. Okay? And then also put in the comment box below if there's anything else that you specifically want to see. Obviously, I'm going to go through all the chapters and pick out the concepts that I think should make it into the concept series. But if there's anything you specifically do not want me to miss, put it down below. All right, guys, have a good night.